Welcome to a Well Formula Podcast, episode number 100. I'm your host, Camilla Joffrey. My dad has now decided he will retire, so I'm going to take over the show. Now, let's get started to make some real money. Okay, just kidding. Here's my dad.
Thank you very much, Camilla, for that wonderful introduction. Of course, Camilla is my lovely daughter, and I'm never going to retire. I don't even know what retiring is, right? Retiring is about just waiting to die. I like what I'm doing. You're going to have to drag me out of here if you want to get me out. Camilla may very well do that when she's older, but for now she's too small, and I can still bench press more than her, so it's not going to happen. Anyway, welcome again, everyone. Episode number 100. And this is a huge, huge milestone, and I want to thank you all for coming on this journey with me. You know, in 2008, when I finished my surgical residency, my net worth was about negative $75,000, give or take $100,000 or so. Not bad, considering that number included education until I was about 33 years old as a surgical resident. And as you know, 2008 was also the year of the great meltdown of the financial system. Doctors that I knew who had been practicing for decades with the intent of retiring soon suddenly realized that they couldn't. After all, half of their money just evaporated within days. You know, they got bamboozled, as my chief operating officer, Jeannie Shuckey, would say. Why? This short story is Wall Street greed. It's the oldest story in the book. You see, Wall Street has created this really profitable game for itself, and here's how it goes. You work hard to make money. You entrust your money in Wall Street through your wealth manager, who's just a minion of Wall Street, of course, with the hopes that your money will magically grow, right? It's like planting seeds or something like that, and hoping that somebody else is going to water them. Maybe not. You know, maybe they'll just kind of grab those seeds and go grow something on their own. Of course, Wall Street, charges you a lot of fees, whether you win or lose. They also make really big bets with your money so that they can make even more money for themselves. Well, why not? It's their money. Because when they win big. And guess what? You don't get to see that big win in your W column because they keep most of it. But when they lose, we all know they are too big to fail, so they get bailed out by you, the taxpayer, right? Pretty nice gig if you can get it. I mean, I think this is absolute genius. Now you have to ask yourself, how do they get away with it in the first place? Why do we as professionals keep coming back for more? Thank you, may I have another? Remember that movie? That's what most people do. After all, doing the same thing over and over and expecting a different result is the definition of insanity. Right, Mr. Einstein? What kind of financial education did you get growing up? That's the question. What did they teach you about personal finance? Well, chances are you're hearing those questions and you're thinking, well, I wasn't taught anything about investing. The educational system teaches you nothing about personal finance, does it? And when we get out of school, what replaces the classroom? How do we get our education? How do we make up for what we haven't learned, which we need to in order to live our lives, right? Who do we turn to answers for when we need to learn about real life stuff? What replaces the curriculum when you leave school? Answer, anyone? Well, I'll give you the answer. The answer is conventional wisdom. It basically acts as a new curriculum, right? The problem is conventional wisdom is not always right. Let me give you an example. For a lot of years, conventional wisdom dictated that the world was flat. Well, we know that's not true, right? But that was just accepted, right? That was just accepted. For you doctors out there, you also know that food pyramid that we used to see on the wall, in classrooms in elementary school that had like fats. It was like the worst thing, right? You're supposed to eat like carbohydrates mostly, all that stuff. Well, that thing's practically upside down. And if you look further, you find out that there was a study by Harvard scientists that was published that said that high-fat diets, high-fat protein diets were responsible for heart disease. And then later we find that that particular study was funded by the sugar industry. That's conventional wisdom, though. I mean, we lived through it. We had that darn that poster on every elementary school in the country. In other words, conventional wisdom, believe it or not, might not even be completely unbiased. In fact, it might have been perpetuated by big money, big banks, Wall Street. Think about it. What is conventional financial wisdom? Let the experts invest your money in a diverse portfolio of stocks, bonds, and mutual funds. Now, why is that conventional wisdom? The only time my dad invested in the stock market was during the dot-com crash, and well, he almost lost his shirt during that period. And, you know, that was the story for a lot of people. But how many people do you know who've actually gotten wealthy because they invested in stocks, bonds, and mutual funds? I'm not talking about people who made a lot of money and then just put their money in those accounts while they were waiting to retire, but I mean that they literally got wealthy because of their investments. Do you know anybody like that? Do you think that the most wealthy families in the world, like the Waltons of Walmart fame or the Rothschilds, invest in mutual funds? Of course not. Then why do most high-paid professionals believe that investing in mutual funds is the responsible thing to do? Because it's conventional wisdom. But here's the problem. Conventional financial wisdom is the creation of special interests. It came from Wall Street. It has been hammered into you as gospel, and to stray away from that gospel, that religion, well, it feels like heresy, right? It feels like you're doing something wrong. I can't tell you how many times I've heard from very smart, highly trained professionals, doctors, software engineers working at Google and Facebook, doing all sorts of stuff that's way over my head, that confess to me that they feel, well, sort of guilty or unnerved about investing in these, quote, alternative assets, like real estate. Alternative assets, right? That's a great label from Wall Street. I mean, what do we think of when we think of alternative? I think like alternative lifestyle, alternative this and that, things that sound kind of scary and, well, a little risque, right? So, are you one of those people? Does that sound like you? Is that sort of like the way you've been brought up? I mean, does your family get on your case? Do they tell you that you're going to lose all your money if you invest in real estate or any of these other real assets instead of the equity markets, and that you're not being responsible? Well, I'm here to tell you that if you don't believe in trusting your money to Wall Street, that in fact you are not crazy, you are not irresponsible, and you are not a heretic. I'm living proof that wealth can be created outside of Wall Street. And in my humble opinion, I will go as far as to say that it is a hell of a lot easier to become wealthy investing outside of Wall Street. In fact, people do become wealthy because they've invested money outside of Wall Street. But where do you start? That's the real question. I'm asked this question all the time. And you know what? There's no simple answer. There is a lot to learn. And this is podcast number 100. We haven't even scratched the surface. We have covered a lot of things. Investing strategies, tax strategies, even asset protection. But we've never put it all together in one place in a comprehensive format taught by some of the smartest financial minds in the world. Something that can be studied and maybe even mastered, right? Maybe becoming a master at this thing. Isn't that appealing? Well, anyway, that brings me to what I am about to announce. I'm really proud to present to you a labor of love on which I have spent the last 6 months of my life with the help of a lot of people and the help of about $150,000 in cost to create. The course was produced by my friend Pam Hendrickson, who spent nearly 20 years producing courses for Tony Robbins to prepare for this moment. Okay, all right, maybe Tony wasn't just a warm-up for me, but the point is I wanted the best of the best to make this happen, and that's why I got her, and that's why I got this faculty who is really just an unbelievable cast, right? So listen to this. Rich Dad Advisors, Tom Wheelwright and Ken McElroy. Tom's tax firm has helped me legally save literally millions of dollars of taxes in the past few years. Ken McElroy is the guy I learned real estate from and who I consider the Michael Jordan of multifamily real estate. Speaking of real estate, how about the real estate guys? Robert Helms and Russell Gray, also on the faculty. They're also friends of mine and some of the best in the business at teaching real estate. Marco Santorelli, their turnkey guru. And if you're into notes and things like that, of course, learn about it from George Newberry, founder of American Homeowner Preservation. There's also Mauricio Raoul, my own SEC attorney, teaching you the ins and outs about investing in private placements. We've also got my own asset protection and estate planning attorney, Kevin Day, to teach you why I sleep well at night, knowing what I know and being structured the way I am. And finally, the legendary Dean Graziosi teaches about the millionaire mindset and the meaning of true wealth. Of course, it would not be my course if I didn't also serve as a faculty on it myself, and I'm going to teach everything I know in this course. This course, which is called Your Roadmap to Real Wealth, is also going to have, accompanied with it, membership for a period of time to Wealth Formula Network, which will become the new home of the Wealth Formula community. This is where I'm going to spend most of my time going forward. You see, what I really want to do is I really want to focus on helping people who are truly committed to taking this whole thing to the next level. I mean, if you want to sit on the sidelines and listen, that's great, but better than being a groupie, get involved, and we are going to create that tribe. And again, the course is called Your Roadmap to Real Wealth, and this may very well serve as the foundation for the rest of your investing life. So check it out. Go to wealthformularoadmap.com. Again, that's wealthformularoadmap.com, and check out what that course is all about, and if it makes sense, invest in it. And of course, I have told you before, I never consider anything like this an expense. I always consider it an investment because inherently it has an ROI. Now, as you look over the last 100 episodes, we've had a lot of big names. I mean, it's pretty impressive, I think. Robert Kiyosaki, Jim Rickards, we had Doug Duncan, the Fannie Mae chief economist, Dean Graziosi, guys like that. But being the 100th show, I wanted this to be about you, so we've recorded some questions and comments on the show. And when we come back, we will play those and have fun celebrating our 100th show.
Hey, Buck, this is Chris in Kent, Washington. I really like your podcast. It just speaks to me. I've been learning for quite a while that there's a whole other way of investing, and you are certainly adding to my knowledge base on that. In the short time that I've been listening to you, I have invested in the crypto fund, self-storage, and I'm in the process of my application to set up the insurance policy for Wealth Formula Banking. My question is, with the huge demographic shift of the baby boomers retiring, downsizing, and at some stage needing assisted living, do you know of any investment that might take advantage of that demographic shift? Some type of perhaps real estate investment that would be, centered around some type of assisted care for seniors. Keep up the good work. Thanks.
So thanks, Chris, for that message. Obviously, Chris is part of Investor Club. That's where he heard about these other investment opportunities that he was referring to. And as a reminder, if you are an accredited investor and would like to see more of these kinds of opportunities, make sure to go ahead and sign up at wealthformula.com to Investor Club. We do have some really exciting stuff coming up there. And by the way, if you are already a member and you've not scheduled a time to talk to me, do so, because some of these opportunities require that we have some kind of a relationship. Now, I have to at least take you out to breakfast or something like that, all right? Anyway, now as for your question, my friend, here's the deal. You're absolutely right about the demographic shift of baby boomers and assisted living facilities. In fact, ironically, if you look at the self-storage opportunity we recently had, one of the reasons that I really liked it was because of the baby boomer demographics, and they're one of the major drivers of self-storage facilities, believe it or not. But here's the bad news, right? People have seen this shift coming for quite a long time, and there has been a lot of institutional money along with small player money in this asset class for a long time. The result is that at least in terms of the big boxes, right, the larger facilities, we are overbuilt. In fact, I found this out, trying to look at this type of investment a couple years back, and I realized that Chase, obviously not a small bank, won't even give out loans on assisted living facilities right now because they've had too many foreclosures and that sort of thing. So it's a little slippery slope. Now, I do think that there is an opportunity potentially in the smaller house model. We've talked about that on the show before. We have smaller houses converted to assisted living facilities, though, because I do think that that's a different bracket of competition, right? There is a demand for niche type of living. In fact, we got my mother-in-law who's got Alzheimer's over here from Chicago back to Santa Barbara, and we put her in one of these smaller homes, and it's so much better than what she was in while in Chicago. It's not even funny, and I'll tell you, we would certainly pay a premium for that kind of situation for her. But here's the thing. As an investor or somebody who's buying this, I do think that there are some inherent problems with that model, even with the small houses, to consider. And here's what they are. One, if you want to buy one yourself and do it well, it will not be a hands-off investment. This is not like owning an apartment building or a house and having a property manager. These people are fragile, and to do it well, they really need to be taken care of. So sure, you can hire a manager, but if you want to run this with care and do it well and not only for the people, but so that you don't get sued, you're going to be needing to be involved. And, in short, you're going to be buying yourself a bit of a job. Now, for some of you, that's okay, right? I mean, if you're really into it, then that's okay. But if you're, already working 50 hours a week and you've got a busy practice of some kind, I don't know that you want to, get into that kind of thing, right? It's not get your hands. It is something that you're going to have to get your hands dirty on. Now, the other thing that I have the other problem that I potentially have with this model and investing in the smaller house model is that being a passive investor is not a bad idea at all, right? But here's the problem. I like to deal with pros for the most part. If I'm going to invest with somebody, I'm going to invest with a pro. And there are just too many beginners and people with full-time jobs trying to syndicate these things. And I'm not saying that they all are, but you got to be really careful. It might be a great model, and there may be potential for significant profit even. But, there's an old saying, I hate to say it, but it's true. And it's a fool with a tool is still a fool, right? Even if you have a great opportunity, you have to look at who is running the show, right? I mean, even these apartment buildings, there's a million people out there who are doing this for the first time. Be careful, ladies and gentlemen. This is a tricky place to be, and you have got to know that just because even if an opportunity looks good on paper, it has to be implemented, right? So be careful. And that's a problem I've seen with this is that most of the people that I've seen who are trying to sponsor this are not people that I would invest with. And for me, people are the most important. 3, okay, another problem. And for me, this is maybe the biggest thing that keeps me away from it. There is a lack of a desirable exit strategy on these types of homes. Now, if you invest in a startup, much of that money will be used to transform a home into a facility, okay? If it doesn't work, guess what? You don't have a house that you can sell anymore. You have to sell it as a facility, and you have to understand that the market for a facility is going to be far less than a single-family house that you just completely turned into something that no one will buy as a single-family house anymore. In fact, talking to some of you out there who were doing hard money lending for a while and were looking at this, I know that some of my hard money lender friends have stopped even lending on these as well because they're concerned that, okay, they may end up with an asset, but then how are they going to sell it? For me, there's not enough scale, and that's part of the problem with the exit too. So when I looked at this earlier, I thought about buying a bunch of them and then, you almost sort of like a private equity model where you would buy them and then sell off the group of homes at higher multiples. That's sort of the classic private equity model. The problem is that I've talked to people in private equity about this, and it's never going to be a model that they're going to be interested in buying because you're going to be selling. The goal is to sell to like an institutional player of some kind, private equity, because if you're trying to get 20 or 30 of these homes, like that's what I was going to do. You want to sell them at once for a premium, then you're going to be selling to private equity. Private equity is really not interested. So decentralization is fundamentally the problem with that, right? So when they have the big boxes, private equity can scale that, right? They can do economies of scale for food. They can, the staffing, things like that. But when you have all these houses all over the places, they can't do that. So it's another problem with the exit. That said, I don't want to throw it out completely. There's a lot of people who are doing really well with it. And, if you'd like the idea of making this your life's work, you could do pretty well. I'm convinced of that. I think you could, if you decided, I'm going to do this. I'm not going to really worry about the exit. I'm going to approach this as, something I love to do. That's something that's great to happen. And, I'll worry about selling this, or passing it on or whatever 30 years from now, then maybe it's worth it. But that's just not part of my investment philosophy. So hopefully that answers your question. And I don't want to sound like I'm so negative, but I also make it a point to, tell it as it is from my perspective. And then obviously these are just my opinions. So next question.
Hey Buck, this is Andy. I am a veterinarian in northern Westchester, New York, and your story resonates with me because like you, I spent a lot of my life studying medicine, and now I want to put my hard-earned money to work for myself. So my question to you is this. If you were starting over again and you had $100,000 to invest, what would be your core principles? You have so much information on your many podcasts, it's hard to digest it all. You talk about real estate, stock market, wealth formula, crowdsourcing and lending, and life settlements, wealth formula banking. What are your core investment philosophies, and where would you start if you had to invest $100,000? Thanks again for all you do, and I look forward to hearing from you.
Thanks, Andy. You are right. There is a ton of information on those 100 podcast episodes, and at times it may seem and feel like you're drinking from a fire hose. That's ultimately, going back to my course, I'll just plug it again. That's the reason I created the course. It gives you the foundation and framework for thinking about things. So I do encourage you to check that out. Again, it's wealthformularoadmap.com and check out if it's for you. But your question, obviously, it's a little bit complicated because everyone's situation is very different. And as for even the $100,000 to invest, it depends if that's all the money you have or if that's the $100,000 per month that you have to invest. And of course, a lot of it also depends on your personal investment philosophy and how active you want to be as an investor, right? Is it something that you really are going to take interest in and look for cash flowing opportunities, or is it something that really, there's a lot of, and I'm not saying this is you, but there's a lot of what we call real estate groupies out there, which like to listen to a lot of podcasts. They like to listen to a lot of real estate podcasts, or mine is not just a real estate podcast, but listen to all these things, but ultimately not really do anything about it. So there's a couple different ways you can approach it, right? So for me, and I've said this before, when we first started talking about wealth formula banking, if I'd known about this 20 years ago, I would have started a wealth formula banking account, because it's just, going to help you amplify. Let me start over. So let me just say this again, that if I was starting over 20 years ago, I would start with a wealth formula banking account. And this is because I know that I was ultimately going to be a cash flow investor. Well, maybe I didn't know, but maybe I didn't know, but now I know. And looking back, that's what I wish I did, because I'm an aggressive cash flow investor. But what wealth formula banking's value is that's going to help you amplify what you're making on investments, and will add a compounding element to an otherwise simple real estate distribution. So basically what it does is it allows you to invest the same money in two places at the same time. And if you have an apartment building making 10% per year, for example, you could just take that 10% per year like you normally do, or if you were doing wealth formula banking, you get 10% plus you get an additional component of compounding interest that increases every year. So to me, that's an absolute no-brainer as a cash flow investor, as a step one, in my opinion. That's what I wish I had done before. Now, of course, really what it comes down to in that is, if you're a cash flow investor, do you want just the return, or do you want the return plus another compounding return? So that's why it's a no-brainer, right? Anyway, now I also talk to a lot of people who want to invest in cash flowing assets, but they are part of that, real estate or real asset groupie group, because they're not, if they're completely honest with themselves, they probably won't do a whole lot, because frankly, they're just too busy, and maybe they like listening to it, but they're really not that engaged, right? And right now they may be investing in an IRA, into a mutual fund or an ETF, and they're just literally just waiting to get butchered by a big correction. So, for those people, and this is why I was really excited about the Velocity Plus product, because I truly believe Velocity Plus is a really great option for those people who are really never going to get involved with investing in, in cash flowing assets or private placements or whatever. Why? Because you essentially have your money, it's still exposed to the stock market. It's indexed to the performance of the S&P 500, but you don't take any of the downside of the market, so you're not going to get butchered if the market corrects 20 or 30%. On the other side, if you can take 12 or 13% of the upside. And once you leverage that, which is what you do with Velocity Plus, you can actually make returns that easily exceed 20%. And again, this was modeled out by Christian Allen in that webinar that he did. And you may want to check that out at wealthformulabanking.com. But if you look at they modeled this out at 7% average growth in the S&P 500, which is a little bit lower than even the wealth advisors like to tell you. They like to tell you it's 8, I think. But we use 7, and when you levered that with 3 to 1, it comes out to about 19 or 20% return per year. And again, you take that along with the side that you're not getting any downside risk. To me, it just feels like a no-brainer. That's my opinion. And like I said, I'm in the middle of underwriting one of these larger ones right now. So, I would check that out. But again, the big thing here is that, you have to I'm going to start that part over. So, as you may know, I currently don't participate in the New York Stock Exchange. However, because of this type of product, I'm going to, because to me it's just another way to get exposure with minimal risk. You can join in on that euphoria, right? I hear a lot of people talk about how, hey, Buck, this is great, but look at how well these people did in the last 5 years in the stock market. That's right. So you could join them. You can join in part of the party, the euphoria that everyone feels when the market is exploding, because you're taking part of that, like it has been in the past decade. But you can also sleep well at night knowing you don't have to worry about the impending correction that I think everybody believes is going to happen at some point in the next couple of years. So Velocity Plus is basically like, it is a wealth formula in a box. It's using the S&P 500 for velocity and the bank for leverage. And so if you are one of those people who's going to do nothing else, that is a great product that you should consider, in my opinion, because I certainly feel better at night if I was a stock market person knowing that I didn't have to take part of the downside. Anyway, I think it's a good place to start, but I think the course is very comprehensive, and frankly, I'll use it as a chance to plug it again. So check that out at wealthformularoadmap.com, and that might give you the infrastructure and also the tribe that you're looking for. So next question here.
Buck, I'm a new listener and fan of the show, also a fellow Santa Barbara resident. My basic question is about Bitcoin, and I'm having trouble putting faith behind the valuations that everyone talks about, because in my simple understanding of it, it seems that parallel technologies could easily be created. And who's to say that Bitcoin is going to be able to dominate the market for cryptocurrencies for the foreseeable future? Why doesn't somebody else, a much bigger outfit, a much more, larger company, technology platform, create competing products, and, the price will just plummet? So my basic question is trying to understand the valuations I hear people ascribing to Bitcoin when there's clearly it's clearly not a limited supply. Unlike gold right now, right, where it takes a miner needs to mine X number of tons of ore to produce 1 ounce of gold. It's just an astronomical undertaking to produce a commodity like that. I can understand and appreciate the value of that. I really love your feedback, because I have not been able to find anybody discussing that matter. Thanks.
Well, thanks for that question.
Looking at
everybody's
cryptos
it's interesting how
everybody's looking at cryptos right now. It's interesting how
anymore, right?
nobody's searching
Market
at Google
correction
anymore,
will do.
right? That's
It's funny too.
Market correction will do. It's funny too. As an aside, before I get to that question,
dad, who's a very good
so
real estate
my dad,
right? But perhaps one of the worst investors.
who is a
ever.
very good real estate guy, right?
He's a
but perhaps one of the worst
into the
investors
ever. Bubble. You saw everybody getting excited. He got excited.
He got into the .com bubble. He saw everybody getting excited, so he got excited. He sold a bunch of buildings back in the late '90s. Just so he could participate in that.
He did exactly what you're not supposed to do. He bought at the top of the market, and then
right. So he did exactly what you're not supposed to do. He bought at the top of the market, and then he got killed, and then he sold it, and he almost lost everything. Honestly. And then, so my dad comes to me when the market's super hot.
Well,
and
what do you think about
in
buying
cryptocurrency? And he says, well,
So I held
what do you
off,
think
held
about
off,
me buying
and
some
Bitcoin
Bitcoin?
dropped to about
Maybe,
10
maybe
grand.
not.
I helped him buy.
So I held off, and when Bitcoin dropped to about
And
10 grand,
of course,
I helped him buy.
Bitcoin itself
I helped him
is
buy
not
some
as bad
Bitcoin.
as a lot of the altcoins.
And
he's
of
looking
course,
at it down.
it's,
And
Bitcoin
he's asking
itself
me to
is
sell
not
them.
as bad as a lot of the altcoins
Right?
are right now, but
Exactly. So it's exactly
he's looking at it go
what
down,
we're
and
doing.
he's asking me to sell now.
"Quote unquote" investors.
Right? Exactly. So it's exactly what
So
you
anyway,
don't
I'm not
want to
letting
do.
him,
This is what most
I'm not letting him
quote unquote
sell yet.
investors
I'm gonna hold on to
do,
it to at
and
least he
they
breaks
get killed.
even, and then
So
I
anyway,
will
I'm not letting
sell it
him.
for and send him
I'm
his
not
money.
letting
But
him sell yet.
it's an
I'm
interesting
gonna hold on to it till at
concept
least he
that
breaks
I
even,
think
then
that
I will
I am now
sell it
looking
for him
at
and send him his
my
money.
dad
But
as a type of
it's
index.
Right.
So when
It's
my
an
dad
interesting
wants
concept
to buy into
that I
a
think
market,
that I am
it's
now
probably
looking at
time to sell,
my
right?
dad
Because
as a
the
type
greed
of
factor
index.
and sort of
So
the
when my
euphoria
dad
is
jumps
there,
into a market
and,
or wants
it's
to jump into a
it's
market, it
to
might
just
be
call
time
it
to
a day and
sell.
because there's
And then
probably
my
correction
dad
coming.
asked
And then when
me
my dad
if he could
wants
get
to
into the
actually
market or I can
sell,
help him do it.
it probably means
Then,
we're near the bottom, and it's
might-
time to pick up
Wait,
some
let's
more,
do that part again.
some more of whatever.
So
it is
I'm going to
that
start calling this
he wants to sell.
my
So
my
I'll
dad
use that in
index,
future
right? So when
times.
my
But,
dad
I
wants
think
to
that
buy into a market,
one of the things that
it's
I have
probably
talked about
time to
investing
sell,
in
right?
this
Because the
stuff
greed
is,
factor and sort of the
you have to
euphoria is
approach it
there,
like you're
and
gonna lose your
it's
money.
time to
I don't
just call it a
believe
day and sell
even the
because there's probably a
people in my
correction
fund,
coming.
I think they're gonna
And
do
then when
quite
my
well
dad
right now.
wants to
You know,
actually
everything's kinda
sell,
hammered,
it
right?
probably means we're
But
near the bottom,
let's look
and
at the
it's time
reality
to
of
pick
what's
up
going on in
some
cryptocurrency
more.
right now.
Some more of whatever
and
it is
this
that
sort of starts answering your
he
question.
wants
I'll
to
get
sell.
it
So
specifically here.
I may use that in
Here's
future times.
here
But
is
I think that
CNBC. I'm
one of
looking
the
at
things
this
that
was
I have
popped up
talked
in
about
Coinbase.
investing in this
Bitcoin.
stuff
It's one of the
you have to
newsletters that I
approach
read,
it like you're going to
all
lose
the
your
time
money.
on cryptocurrency.
I
It's
don't
like
believe
consolidates all these different
even the
articles.
people in my fund. I
Anyway,
think they're going to do quite
the
well. But right now,
CBOE
everything's getting hammered,
encourages the
right?
SEC
But let's look
allow
at the
Bitcoin
reality of
ETFs.
what's going on in cryptocurrency right now.
You know how big a deal that is? That's huge.
And this sort of starts
A
answering your
Bitcoin
question. I'll
ETF
get
would
to
dump
it
so much
specifically
money
here, but
into this.
Here's
it's crazy. It would dump
here
an
is
enormous
a
amount of money
CNBC. I'm
into
looking
the
at this. This
cryptocurrency
was
market.
popped up on Coinbase.
So I'm not
Coin-
worried about
It's one of
it. I mean,
one
I
of
think
the
cryptocurrency
newsletters that I
market
read
peaked about 700
all the
billion.
time
We're
on
down below
cryptocurrency.
300
It's like
billion right
consolidates
now.
all these different
I
articles.
still maintain
Anyway,
that
the
this is a technology that is
CBOE
going to
encourages the
prevail.
SEC
It will be $1 trillion market
to allow
I'm still
Bitcoin
bullish,
ETFs.
with all the things that are going
You know
on
how big
right
a
now.
deal that is?
Because
That's
the
huge.
CBOE is
A
very
Bitcoin
powerful,
ETF would
and,
dump so
you
much
know, when
money
you see a
into this.
Bitcoin
It's
ETF,
crazy.
we're
It would
seeing,
dump an
you know,
enormous
BlackRock
amount of
get
money
into,
very
if we're looking
quickly
at Wellington
into the
Capital,
cryptocurrency
a bunch of
market.
institutional money
So
invested
I'm
in
not
some,
worried about it. I mean, I think
actually in
the
some platforms
cryptocurrency market
that are
peaked about
made
700 billion.
for
We're
hedge
down
funds
below 300
specifically
billion
so that
right
they can
now.
participate.
I still
This is
maintain
something that I think
that
we should
this
be
is a
watching,
technology that is
speculating,
going to
which is not a
prevail.
four-letter
It
word.
will be $1 trillion
It's what you
market.
do instead of buying
I'm still
Maserati
bullish
for the year. That's
with
why I
all
still
things that are
drive
going
my
on right now.
Toyota that I
You see, the
had
CBOE
when
is
I
very
finished
powerful,
residency.
and
It seems to
you know
work fine
we may see a
still.
Bitcoin
Anyway,
ETF.
so
We're seeing
getting back to your question, let's talk
BlackRock
about
get
Bitcoin
into. If we're
specifically.
looking at Wellington Capital,
Let's
a
first
bunch
talk
of
about
institutional
valuation,
money.
which you brought up.
I've invested
It's actually
in
pretty
some.
simple.
Actually, in some
Right,
platforms that
there
are
is, in fact, a
made
limited
for
supply
hedge
of
funds
Bitcoin.
specifically,
There will
so
never
that
be
they can
more
participate.
than 21
I
million
mean, this is
Bitcoin,
this
that
is
are
something
mined,
that I
and
think
a
we
lot
should
of
be
them have
watching,
been lost because earlier a
speculating,
bunch of,
which is not a four-letter
teenagers
word.
and stuff
It's
owned
what
a
you
lot of
do instead of
Bitcoin
buying
that they didn't
a
take care of, they
Maserati
lost
for the
it.
year. That's why I
Anyway,
still drive
there'll
my
never be more than
Toyota
21
that I
million
had
Bitcoin, and because
when
of
I
this,
finished residency.
the value of
It seems to work
Bitcoin
fine still.
is simply
Anyway,
a product
so
of
getting
market
back to your question, let's
capitalization.
talk about
And so
Bitcoin
this makes
specifically.
Bitcoin actually
Let's
a
first
lot
talk
more
about
like
valuation,
gold
which you brought up.
than fiat currency.
It's actually pretty
right?
simple.
By the way, it is expensive.
Right,
to
there
mine
is in
as
fact
well.
a
That's
limited
obviously
supply
one
of
of the
Bitcoin. There
issues
will
that's
never
coming
be
up. It
more
requires a lot of energy.
than 21 million
As for
Bitcoin that are mined, and a lot of
is
them
the
have been lost
trillion-dollar
because early on a
question,
bunch of
right? As for
teenagers and stuff
currently
owned a lot of
circulating,
Bitcoin and that they
there
didn't
is
take care of
no
it and they
other
lost
coin
it. But
for the purpose
anyway,
of
there'll never be
value
more than
storage
21 million Bitcoin, and
that I
because of
personally
this,
can see overtaking Bitcoin dominance anytime
the
soon.
value of
There's some
Bitcoin
own whales,
is simply a product
people
of
who
market
own
capitalization.
billions of dollars of this stuff.
And so this makes Bitcoin actually
going down.
a lot more
Bitcoin
like
has a
gold
lot of advantages over other
than
coins,
fiat
the least of
currency,
which
right? By the way, it is
is being the
expensive
first one
to
to
mine
show.
Bitcoin
I mean,
as
that's
well.
a big
That's
deal.
obviously one of the
Bitcoin was the first
issues that's
one
coming up.
that
It
has
requires
that
a lot of
advantage.
energy.
It's also
As for
more
competitors,
And
listen, this is
now,
the
fact that a lot of
trillion-dollar
billionaires are
question,
heavily
right?
invested
As for
in it, or
coins
they become billionaires
currently
because of it,
circulating,
you know, like
there
the
is no
Winklevoss
other
twins
coin
or, you know,
for
any
the
number
purpose
of
of value
companies like that.
storage
I don't see Bitcoin
that I
going
personally
away anytime soon.
can see
I think
overtaking
it's
Bitcoin
almost
dominance
created its
anytime
own
soon. And
little,
you're seeing all the
safety
whales,
net
like
with all the billionaires
people who
around it.
own, billions of dollars of this stuff.
There are, however, other
they're
technologies
doubling
or
down.
projects that could
Bitcoin has a
allow
lot of
Bitcoin to
advantages
run for its
over
money,
other coins.
even as a storage of value. But I don't see that happening for years. Years
the
from now,
least of
right? I mean,
which
even if there's
is being the
a new
first one to the
competitor,
show.
that comes out
I mean,
today,
that's
it's
a
gonna
big
take
deal.
a while
Bitcoin was the
for
first
that
one,
to
and it has that
potentially
advantage.
overcome,
It's also
or
never been
overtake
hit.
Bitcoin.
It's
One
also
of my
never
favorites,
been
by the
hacked.
way, as
And
many of you know, is
now the
Ethereum
fact that a lot
Hashgraph
of billionaires
is
are
not
heavily
trading
invested in
yet.
it, or they've become
But the
billionaires
one issue
because
with
of it,
Hashgraph
like the
that
Winklevoss
is
twins, or
is a
any
concern
number
for me a little
of
bit. That
others
is,
like
it's
that.
not open
I don't see
source.
Bitcoin going away
And
anytime
by
soon.
the way,
I
that
think
answers
it's
another
almost
part of your
created
question.
its
You
own
said,
little
why can't a
safety
company
net
produce
with all the
this stuff?
billionaires
Because
around
generally
it.
speaking, a
You know,
company's not supposed
There
to
are, however, other
produce
technologies and projects
control
that could
a
very well give
cryptocurrency.
Bitcoin a
Ideally,
run for its money,
decentralized, right?
even
Now,
as a
Hashgraph,
storage of value.
the
But I don't
coin,
see that
Ethereum
happening for
Hashgraph,
years.
will be
Years from now, right?
decentralized,
I mean, even if
but
there's
it's not going to be
a new
open source. In
competitor
other words, the
that
code
comes out
cannot
today,
be
it's going to take a
changed
while for
by
that to potentially
individual programmers in
overcome
forked doc,
or
like
overtake
the way
Bitcoin.
you see Ethereum.
One of my favorites, by the
Ethereum
way, as
Classic is
many of
forked.
you know, is
It forks
Hedera
everywhere.
Hashgraph.
That
It's
can't
not
happen with
trading
Hashgraph. That
yet.
could be a plus, and it could
But
be
the
a
one
minus.
issue
I
with
think I'm guessing it'll be a
Hashgraph that
plus.
is a
And
concern
because
for
it
me a
can't
little
be
bit.
forked,
That
I
is,
think
it's
that
not
people
open
will
source.
like that. You can still be
And
built on
by the way, that
by
answers another part of your
developers.
question. You said,
But it also
why can't
makes
a
it
company
potentially less
produce
attractive
this stuff?
in
Because
a
generally
world that is
speaking,
really
a company is
driven
not supposed
by
to
decentralization.
produce and
But
control
for
a
now,
cryptocurrency. It
suffice
has
it to say that I believe that
ideally
Bitcoin
it's
dominance is going to
decentralized,
prevail
right?
for
Now,
the foreseeable
Hashgraph is
future.
the coin.
Once the
Hedera
Bitcoin
Hashgraph
market
will
goes up, I think that
be
spills over
decentralized,
into
but
the
it's not going to be
alternative
open
coin
source.
world. That's
In
when
other
you're gonna
words,
see
the
the
code
altcoins
cannot be
really take off
changed
again
by
as well. So hopefully that
individual
answers your
programmers
question.
and forked
Next
doc,
one
like
here.
the way you see Ethereum. You have Ethereum Classic is forked. You have forks everywhere. That can't happen with Hashgraph. That could be a plus. It could be a minus. I'm guessing it'll be a plus. And because it can't be forked, and I think that people will like that. You can still be built on freely by developers. But it also makes it potentially less attractive in a world that is really driven by decentralization. But for now, suffice it to say that I believe that Bitcoin dominance is going to prevail for the foreseeable future. Once the Bitcoin market goes up, I think that spills over into the alternative coin world, and that's when that's when you're going to see the altcoins really take off again as well. So hopefully that answers your question. Let's see, next one here.
Hey, Buck. Jerry Gosnell here. I just want to thank you for all the work that you do in educating us on how to become better investors, something that we're never taught in school. I just want to give you a perspective of what my situation is and how you've actually helped immensely. Prior to listening to any of your podcasts or doing some due diligence, I really was at a loss for understanding how to invest my money. I'm a high-paid professional. I've been, driving money into a 401k, having it sit in the bank. But after really sitting down and understanding where my expenses go and learning about your podcast and pretty much listening to every episode, I've learned there's a better way to invest out there. So within a year, I've taken everything I possibly could out of the market. I've invested in your life settlements fund. I've also invested in gold and silver and precious metal areas. I've also participating in the wealth formula banking, which I see some great value in, especially longer term. In addition to that, I'm now educating my children, 11-year-old and 9-year-old, both girls, on how they can invest and learn not to work for anybody, but how they can survive for themselves. And one of those was through AHP. And so I've also invested there and took their money and showed them how they can put it in there and gain a 12% return out of it. And now they're starting to really see the value of how if you manage your money correctly, and we do things that were never taught in school, how it can benefit all of us in the long run. So I want to thank you very much. It's great not only having conversations with you, but also listening to your podcasts, listening to your blog, reading your blogs, seeing you on YouTube, all of the stuff you do there. And I feel like you've completely transformed the way that I look at investing. And so my motto now is to increase overall wealth through financial freedom and family focus. And I contribute a lot of that to the foundation that you gave us. Thank you.
Thanks, Jerry. Boy, I mean, people are going to start thinking that I paid you for that or something. It's a very nice thing to say. Listen, Jerry is another member of the Accredited Investor Club. Obviously, he's investing some things that are only available to the accredited investors in the group. But, you know, this is the kind of message that really makes my day because, well, why did I start this podcast in the first place? Well, for one, no one at cocktail parties ever really wanted to listen to me talk about money and investing, and my wife didn't really like me talking about it anyway because it was sort of rude to talk about money in social situations. So, and my wife doesn't like talking about this stuff. So I decided, you know what, I will find people out there to talk to on a podcast. That was one of the reasons. The other reason, of course, was that the other reason was I couldn't really find a podcast that was speaking to me because I wasn't, trying to escape from a cubicle. I wasn't trying to retire me, it's retire me this or, whatever. Just the desperation and all that, it just didn't appeal to me. All I was saying is, hey, I make money, how do I invest it? And I want to hear what people have to say who've got money. So that's why I started it. The other reason for starting the podcast is that I talk about this. It's part of true wealth in general is having a mission in the first place. And what is a mission? I mean, I found mine in providing my brand of financial education to my listeners because, frankly, it's selfish. I really enjoy learning about this stuff. Obviously, I want to help you too, but it's really a lot of fun for me to make it sort of my job to uncover more and more secrets of the wealthy that we can tap into collectively as a community. I'm doing this stuff. I'm drinking my own Kool-Aid, and what's neat about it is that you're listening, and I'm finding out things, and I can just pass it along, and we can all benefit, and that's really fun. And so I'm living out my mission, and there's really nothing I'd rather do. There's really nothing I'd rather do on a day-to-day basis than what I do now, which, again, I think is true wealth. Now, there's one thing. I probably would rather own the Minnesota Vikings, but that's going to take a little bit more work. I'm going to give myself another 10 to 20 years to get there. But anyway, Jerry, thanks again for that nice comment. So true wealth. That's what it's all about, right? The financial stuff will help you get to the point where you can really start living out your mission, which is your passion. It's not about retirement. It's not about living the way you want to live. It's about living the way you want to live and do the things you want to do now. If you're thinking about retiring, you have not found your mission. That's what I'll tell you. Retiring, in my view, it's just... the notion of retiring, it's just waiting to die. Your mission is what you would do until the day you die, whether you got paid or not, because you love doing it. That's what it is. So that's what you really ought to be striving for. Being able to do what you want every day, and feeling like, you're super happy doing it. Looking forward to hearing more stories like Jerry's and the rest in the future. It looks like we're going pretty late right now, so I am going to leave it at that. I do encourage everyone to leave some questions on SpeakPipe for the next set of questions on an Ask Buck episode, and we will be right back. Okay, welcome back to the show, everyone. Thanks again for making it through the first 100 episodes with me. And over the next couple years, I'm hoping to get to know more of you over the next 100 shows. Make sure, though, that you go to wealthformularoadmap.com and get more information on the course. I really do think it's something that you ought to consider investing in. what a lot of the questions today were about, or comments were really about, where do you start and how do you start and all this stuff. And that's really what that course is all about. I mean, honestly, I can see that being something that I give to my children when they're old enough. Of course, they're not quite there yet, but I'll force them to watch it in another year or so. Anyway, that is also going to give you access initially for free to this Wealth Formula Network, which is going to be our online community. We're not going to do it as a Facebook group because I don't want Facebook owning or controlling what we do. We need to be able to control our own community and do it the way we want without any changes in the law or the rules of Facebook. So anyway, we'll also plan on having some live events in the near future. But in the meantime, I just want to thank you again for listening. I appreciate you very much. And that's it for me this week on Wealth Formula Podcast. And time for another 100 shows. And I'll sign off saying that. And that's it. Let me finish this off again. In the meantime, I just want to say thank you again for listening. I appreciate you very much. And that's it for me this week on Wealth Formula Podcast. On to the next 100 shows. This is Buck Joffrey signing off.